All right, it's time for a new trading update. This video is going to be a little bit different. We're going to talk briefly about the trade that's currently in, but then I'm going to go into a lot more overall market um, strategy talk. So, revolving around my strategy, why do I need an algorithm to trade my strategy for one? What about the power of compounding and how compounding can be used in a positive way when trading even smaller accounts? How does my strategy actually even work? And what's really needed? And then I'll go into some of the details about how to copy my trades and what I do. So the first trade that's in here was done after what I've mentioned before, an inside candle setup. So we have an inside candle setup here, which is a 2-bar setup that I look for an entry after my RMI, which is the relative momentum index, which I'll talk about in just a second. So I look for this 2-bar candle setup, which is a bullish candle that makes a new high from the previous candles before it, followed by a bearish inside candle, and then I enter on directly the next candle. And currently it's in small loss, as you can see, but I'm expecting a move on the downside from here. The relative momentum index is a very helpful indicator because it shows you overbought and oversold conditions, but it's also relative to price. And so there's not a lot of what's the word looking for? Uh, delay is a lot of times what indicators do. They have like a delay. There's um, most indicators follow what's happening with the candlesticks and the price going up and down, right? And a lot of times they are delayed in what they display, which makes them not very helpful in current price and where the market actually is at the moment since they are delayed. And so that can make trading a bit difficult uh, when you're using indicators and how to use them properly when they're always following the market instead of actually showing what the market's doing. So I have this combination here. And right now, I have my strategies completely automated. So this trade was entered automatically without me even having to put anything in because it was taken through what they call expert advisor. And the expert advisor places my trade automatically into the market, and it manages it for me as well. So that means that if the market happens to go up against me, another trade will be entered, where the expert advisor or robot looks for, if it didn't get the push down here, it looks for the push down later on. And if it continues to go up, it will continue to look for that pullback. And eventually, according to my strategy and what the market does and how the market behaves, I will eventually get that pullback and it will happen. So some users have asked me, well, what if you're wrong and indefinitely wrong and you just keep entering trades, going in on the wrong side, and eventually it's gonna come and bite you in the ass. uh, you know, that's always a possibility. But because I don't know how the market's going to behave in the future. But I do take very small risk on each trade that I take, each basket of trades that I take, allowing my strategy to time for for price to move back into a profitable direction. Because I can't always be right on my first entry. A lot of times I am, where it will potentially go down right away. But sometimes the market may not reverse right at this point. It might take going up a bit higher, up to this point up here, before it falls back down. And it's really impossible to know when that's going to happen. So that's why I've developed a strategy that is pretty accurate in knowing when the price will actually, change in direction. But it also is very good at managing when it's not and when it doesn't happen. And that's why it enters more positions when it thinks that it's going to do that push back down in this particular case. So I have to be covered on multiple areas. I have to be covered on money management. It has to be a solid strategy by itself. The risk has to be controlled. The execution has to be on very very good. So the broker has to be good when it comes to my algorithm and how it enters the market. The broker has to be capable of accepting that kind of order. And the strategy has to be sound over time. It can't just be work well in the past. That's important, yes, because what has happened in the past may happen in the future. But as we know, the markets are always changing. So it's important to have a strategy that's able to adapt. And a big part of adapting in a strategy is if I'm not right on the first order, I have to have the proper risk to an attempt to be right the second, the third, or fourth time. I need more chances. And that is how my strategy is able to work a certain situation, is that I wait for the market to move into my favor. But if it doesn't move into my favor and I get stuck in a situation where it's starting to look like I should give up on this particular basket of trades and move on to better opportunities, in that case, taking a loss. Sometimes that is a decision that needs to be made. But you can't hold on to something forever uh, because it could destroy your account if you have too much floating loss, if you don't have enough leverage, and it could deplete your account. That's one reason. That's one way that a lot of people actually lose in the market, is that they over risk their account, either by too much risk on each trade or holding on to positions too long. So the balance here is knowing when to take a loss and move on to better opportunities. All right, so that's what my strategy looks for. It looks for good entries in the market using good money management when it comes to risk on each trade and how trades are entered. Now you might be wondering, well, how come I can't just do this on my own? You can potentially trade this strategy by yourself manually, and that's why I actually tell people what it is on my videos. I tell them pretty much everything about my strategy. But a lot of people have struggled to actually implement it into their daily trading because they don't know everything about it, and they don't know how it works, and they don't know how to implement the things that I'm saying into a workable strategy. And that's not a very uncommon thing, because it's hard to really see somebody else's vision unless you're getting one-on-one lessons with somebody or with that person. But my strategy actually enters trades not just in a basket. You might be wondering, well, if this trade was wrong and it keeps entering more and more trades, it actually enters on a grid. And a grid is a specific amount of pips or space in between each trade. In my case, it's each 20 pips, which it says 200 there, if you can see that small little number. 200 means 20 pips, and that's just basically the space, the amount of price movement. And it's hard to be a grid trader when you are manually trading the market. That's one reason why I developed a algorithm to trade in this way, because it's very difficult to do so if you're trading the markets like I am showing you right now with the chart, and you're entering the trades on your own by pressing a button. And that can be a little bit difficult to trade the strategy. And so that's why I think that my strategy is better than most manual trading strategies out there. It's because it's able to do something that most manual traders are not. So there's a leg up for me right there because of that. And so let's step aside and show you my strategy over time and what that looks like. So here's one of my strategies, or one like it, that you're looking at right now, or that individuals are copying my trades on. You can see that the majority, well, there's one small loss right here, but the majority of trades close in a profitable way, even over years of time. This test was done from 2010 to 2018, 220. So the strategy works very well over time, and it gives my trades, like I was talking about before, available space for the market to move in my favor, within reason, obviously. But you have an account 3,000 right here. Sorry, I can't underline. 3,000 turning into 53,000 in a span of 8 years. 8 years is kind of a long time to turn 3,000 into 53. But come on, look at it in this way, how smooth it is. Yeah, I could potentially push the profit more on this, but I want a safe investment. And that's what I'm doing with my followers right now, is that I've had some people ask me, well, I want more profit. I'm used to the cryptocurrency market where the gains are huge and the potential is high. But I continue to tell people that we want a safe investment. It's more important to protect your investment than it is to make obscene gains. Because the more that you try to make in a market, the more risk you have on top of that. They go hand in hand in just about every single scenario. So it's important for us to know how the market works and what's manual trading and what's algorithm trading and what's the difference and are there benefits to both? Well, understand the benefits of manual trading algorithm trading and it can do things that humans can't. But on the other side, on the flip side, manual trading, you can do things that algorithms can't do. Algorithms, it's very difficult for them to have any discretion. They don't know what it means when news is coming out and how to appropriately handle it very well. They're not as smart as humans. It's following a protocol. It's following a rule base, and so it's hard to make algorithms really flexible and have a good amount of discretion. And so when it comes to looking at the charts and making a decision, that is something that a human has over an algorithm, is that choice to take or not take a position. Okay, so that's how that's the part of the process of developing my trading strategy. And let's go into compounding because a lot of people think, oh well, 3,000 into 50,000, like I was saying, is over 8 years is not that much. But when you take compounding into consideration, a $3,000 account with a 10% per month on average gain over 24 months, which is 2 years, with a daily compounding interval, we get a $3,000 account turning into 32. Now this is just math, right? And using compounding, but it does show you the power of compounding. Once your account continues to gain in value, you are able to use those profits and compound them to give you more profits over time. So a $3,000 account turning into 32 in just 2 years. So this is the kind of stuff that you need to know to help guide you in investing, help calm you down, help you realize that 10% is actually is a big gain in 1 month. When you consider other investments like in the stock market uh, or anything, a standard amount of investing or a high amount is actually 12% per year, or anywhere from 10 to 12% per year. And so if we're making gains of 10% per month, that's substantial. And honestly, I don't think it's safe to try to get more than that, to get more than 10% per month, because, or what I'm trying to go for, which is 8 to 12%. Because I want to stay within means of real, of realism. And if we're shooting for 20% per month, that's a really hard thing to be sustainable in, and be uh, consistent in. I just don't want that to be a thing for everybody. I want you guys to understand what true investing, what real investing should be. Maybe some people even think that 8 to 12% per month is not real. But I'm able to do it here. It doesn't mean that I'm not prone to have losses or, it's investing. There's always risk. If I lose, you guys are most likely losing as well, those that are copying me. But I do have a strategy that is very consistent over a long period of time. As you can see from all these tests that I've run. It's been successful for the last 4 years that I've been using it, with one losing month. And it was because of a decision I had to make. I was in, at the time, 15% drawdown. Sorry, my headset turned off. 15% drawdown on one of my accounts. And I had a decision to make. It was a 15% drawdown on the pound Canadian dollar. Theresa May was having a speech that was going to affect the pound in a big way. I was at 15%. I just decided that either cut my losses at 15% or hold them through the Theresa May speech that I knew would affect the pound in a big way, but I didn't know if it was going to go up or if it was going to go down, or I said down or up, and that was a tricky decision to make. And what did I do? Well, I actually cut the 15% loss. I turned it from a floating loss into a realized loss. I didn't want to wait for the speech to see what would happen because it was too much of a flip of a coin. It was a preventative loss. So what happened after the speech was done? Well, it would have gone in my favor. I would have come out with profit. So you could say I took a 15% loss for no reason, but it was preventative. I did it just in case it would have gone more against me. What if I had left it in and it went the complete opposite way and not in my favor? I would have been more like in a 25% drawdown, or maybe even 30 by that time. Not something that I want to take a risk on. So this is how I look at investing. I want to be as safe as possible, and it's more about protecting my account if I see something that could hurt us in the future. I might take a preventative loss, even though it may not even be necessary to take it after the fact. But that's the thing with when it comes to an active market, is we don't know what's going to come next. And so we have to make decisions that are hopefully right, but if they make sense, and decisions that I make for you guys, whether it's now or in the future, it might be the wrong one, but it's something that needs to be done, and a decision needs to be made in order to help our account grow, whether that's taking a loss or waiting for a profit. So these are all very important things, and I just wanted to share these things in this video. I know it's a bit longer than my past ones, but of the thought process of being a trader, and what the possibilities are, and what kind of action and responsibility I have on my account, and how that transfers over into yours. All right, so at this moment, I'm trading about $130,000 now. 126 of it is at Oanda, so I'm only making about 2 to 4% per month there. And on my account that everybody's copying from, or roughly about 57, 58 people. Actually, I think I'm about 60 people now. So about 60 people are copying from this account, which is $1,392, and we currently have a trade-in on that as well. And a lot of my users have reported some gains. And just recently, let me see. These are some of the people that have sent me some nice reviews. Ryan's is perhaps young in age, but you just cannot ignore his 13 years of experience in the Forex market. I'm glad to be a member of his community, and his strategy really works. Looking forward to a bright future with Ryan. There's a bunch of nice notes that people have written to me so far. I hope that they continue to come in, because it helps keep me going in this. And I know that my price is a little bit high now. I went from being free the first 3 days during a promotional period, and then I decided to go paid route. And some people were frustrated that, why are you going paid when that means that you're not successful? I would say that I'm successful if I'm trading $130,000, whether that is all of my money or if that's managed. Not every trader manages $130,000. You can look online. Most retail trading accounts are under 10K, and that is a fact. The majority of them are, about 90%. And so when you see a trader trading more than that, that's a pretty big deal. So you guys should, understand what that actually means. I'm not trying to pat myself on the back, but just understand that I'm serious about this. So, it's not going to be all pretty during this course. There will be times where we'll have some drawdown, and we won't make our goal of 8 to 12% per month. Maybe we'll be just under it. We'll make 5% one month. Maybe we'll make 15% another month. And these things are, you can't just give out these numbers uh, and expect that we're going to profit this amount. Like I mentioned, it is an active market, and we take what we can get. My prediction is that we'll be within that range, but it's hard to predict every single month because the price is different and it's always changing. All right, I think that's all I wanted to cover in this video. I'm going to do more of this in the future. That is, if you guys, like this video. If I don't see a lot of likes coming in on it, then I might change how I approach my videos when it comes to trading in the future, because I don't want them to be boring. Maybe this was boring. I don't know. But let me know, and I can bring more of this or make some changes in the next one. But I hope you guys liked it, and I'll give you guys another update hopefully soon.